What's going on, guys, and welcome back to another video. So today I want to give some brief updates on two holdings that we've discussed a lot in prior videos in the form of Healthier Choice Management, ticker symbol HCMC, and an ETF in the iShares Global Clean Energy, ticker symbol INRG or ICLN, depending on which holding you're actually in. Again, the only difference here is currency, so I'm going to give some brief updates on both of these holdings today. And with all that being said, let's dive right on into today's video. So let's start off with HCMC, a very popular penny stock over the last few months, both for positive and negative reasons. Now we can see on screen here that it's currently trading at 0.001309 cents a share. On the 3-month chart, it's down 27%, as we can see here. It's also on the 1-month chart, it doesn't look too good either. It's down 45% on that. On the 1 week, it's down 13.3%. On the daily chart is pretty much break even, down 0.08%. Now, although I made it clear in many prior videos on HCMC, I don't really believe in their fundamentals or long-term growth. However, I do find them a very interesting short-term stock to keep an eye on. Again, there's a lot of money to be made even if the stock falls in terms of short selling, or if you want to kind of get in for a few weeks to try and make some profits as well. Either way, there's definitely a lot of ways to make money from this stock. Now, in prior videos as well, we discussed some of their main catalysts in the form of the rights issue, the lawsuit in particular as well, and also other mini catalysts such as the earnings report for Q1, which probably is a bit outdated at this stage, and also other mini catalysts at play such as HCMC Day. So I really do find it very interesting to keep up to date with how the stock is performing. Now, I just want to make it very clear as well before we carry on that this is just my own personal opinion in terms of fundamentals, and obviously I'm not a financial advisor by any stretch of imagination. So again, you might think complete opposite to me, but this is just my own point of view in terms of HCMC not having a lot of great fundamentals in comparison to a lot of other penny stocks that are out there. Now, there isn't a lot of big updates for HCMC in terms of the lawsuit. Again, it's kind of petering on again for weeks and weeks on end here. But surely over the next few weeks, we're going to have some big updates, which would really be the defining factor for HCMC, in my opinion. Now, again, as I mentioned, there's 3 outcomes here in prior videos. The first of these, they'll win the lawsuit, and the other, they'll lose, which is kind of obvious enough. The third one here as well is that Philip Morris might actually try to buy out HCMC. Now, again, if you're not aware of this lawsuit, it's basically, in a nutshell, HCMC are suing Philip Morris for rights infringements on one of their vapes. So again, I find this very interesting to follow, even though I currently do not have a stock within HCMC. Obviously, I'm fully transparent on this channel. But again, I still find it very interesting to keep up to date and kind of see the psychological factors behind all of the investing within this stock as well. And again, I've mentioned in prior videos that even if they do win the lawsuit, I feel that a majority of investors within the stock will start to sell out because of them making a profit. And obviously that's the whole point of investing, is to make money, so you can't fault people here. And again, this brings back to the fundamentals that a lot of people are invested in the stock just because of the lawsuit. So because there isn't really strong fundamentals, again, in my own opinion, I do feel that even if they win the lawsuit, people will start selling their stock at a profit, eventually kind of dragging down the overall price again. Now, Seeking Alpha have made a very interesting article here as well, saying that HCMC is going to be overvalued, even though it's currently trading at 0.0013 of a cent, which is hard to believe. But the main reason or point they're making here is that to keep issuing shares, to raise capital. But again, this isn't really good long term at all either, because the more shares is going to just make it really kind of liquid, in my opinion. And by becoming more liquid as well, I mean basically they're diluting their overall value per share because they keep issuing more, which long term will have a negative impact as well, I believe. And also we can see here at the bottom point that if they don't demonstrate strong growth in the next few months, that they should only be valued at about 40 to 50 million on the market. Now, one of the main reasons why Seeking Alpha believe HCMC is overvalued is because the majority of their revenue is coming from their online groceries, or retail groceries should I say, and not the actual vapes, which a lot of people are invested in the company because we can see here that on average about 614,000 of the revenue, which equates just under 18%, is from the vapes. So again, people probably are surprised here, because I believe a lot of people think that their vapes for this stock are representing a lot bigger percentage than 17.7%. So although there isn't much of an update in terms of the main catalysts, this overall article really hits the nail on the head in my opinion, and it kind of backs up what I personally think as well on why I'm not kind of investing in HCMC at the moment, although I do find it interesting to follow, Seeking alpha here, kind of hitting it in the head as I said, and I have 3 main points. Basically, the declining revenue, their operational loss, and continually issuing shares is definitely not going to work out in HCMC's favour, in my opinion. Now, the second holding I want to give an update on is one I currently hold in my 33 holdings. Now, in synopsis, again, this is probably one of 2 in my overall 33 holdings that's currently in the red. So we'll see how much it's down at the moment. But long term, I really do feel that the iShares Global Clean Energy ETF will reap the rewards. So come to think of it there, as I just checked, it's actually my worst performing holding out of 33, which is ironic enough, even though I'm praising it. Again, we have about €739 in my energy pie, 3 holdings overall. The 2 older school stocks are keeping this pie afloat in the form of ExxonMobil up nearly 75% and Chevron is up 45.7%. So 2 of those are some of my better holdings, definitely. However, the kind of problem child here, so to speak, is the iShares Global Clean Energy ETF, which is currently down 11% at the moment. Now, kind of in summary as well, we have about 45 shares within this ETF, and we bought a further €25 yesterday, or about another 3 to 4 shares. Now, probably the main reason why I'm optimistic here is because it's a no-brainer as such in terms of clean energy leading the way in the next 5 to 10 years. So slow, consistent patience here. Even though it's in the red at the moment, I'm still putting in a few shares every week or two, which in the long term hopefully will pay off. Now we can even see the 2 older school stocks here, ExxonMobil and Chevron. They're doing very well at the moment, but certainly over the next 5 to 10 years, we're going to see a massive shift away from these older kind of non-renewable sources of energy into the more clean energy style stocks. So we can see here as well that the iShares Global Clean Energy ETF is currently trading about £9.02. My average cost is the dot line here, about £10.36. Now this kind of is a great example here of why you shouldn't throw all of your capital in at once and should slowly drip feed it in and always have a cash reserve at your disposal in case it drops even further. And this is again an ample opportunity, or an example here. For example, on a 3-month chart it's down 16.55%, on the 1-month chart it's down over 6%, and on the 1-week chart it's down just under the 2% mark. So even though as well we have a few €100 here in our free funds that we saw earlier, I don't want to throw it all in at once because, for example, I only want to buy a few shares at any given time, because if it drops further in price, I'll have cash reserves to buy in more. However, if it goes up in price, well and good, it's a kind of win-win situation either way, because it just means I'm going closer back to parity. Now, one of the main things that will help the longevity and diversification of this ETF, again, as mentioned in prior videos, is that it's went from 30 holdings up to 82, and it eventually wants to get to over 100 or the 100 holding mark. So I'm very happy with that, because it does mean that it's harder to manipulate any of these shares if a large inflow of capital comes in at any time. Now, originally on the 30 stock ETF, Plug Power was the top position, but we all know what happened there in terms of fund accounting errors, which had a disastrous effect on the stock, and I went down to about 10th position. Now we can see Plug Power is about 6th position at the moment or so, and it's slowly moving its way back up the ladder. But as it stands, Vista's Wind Systems is currently the top holding in this ETF with 8.2% holding. Now, there's also some index providers warning that this clean energy sector is kind of becoming overcrowded as such. Now, they're kind of giving reference here to 1999, kind of small US tech companies. But again, I really do believe long term you can't really go wrong with clean energy, and in particular by holding an ETF, because again, there's so many different subsectors such as solar, wind, etc., that it's very hard to pick any individual winners. So to be able to sleep at night as such, you're much better off to have an overall holding of the clean energy, and this ETF is certainly the way to go in my opinion. So as I says, I'll continually invest into this ETF, especially when it's in the red, but I don't want to do anything crazy here. I just want to buy a few shares every week, as slow, consistent, boring trading as such will certainly pay dividends long term. So I'm really looking forward to seeing how the outlook will look in about a year to 5 years time. Now, if you're only looking for a quick buck as such, ETFs, especially in clean energy, probably aren't for you. But if you have a long-term outlook and have a few years to wait, again, this, in my opinion, obviously I'm not a financial advisor, so you need to do your own due diligence, but in my own personal opinion, I do believe these ETFs will pay dividends long term. So with all that being said, that's just a kind of brief update on these 2 holdings and anything that I thought was of interest over the last week or so. If you made it this far, thanks very much for your support as always. We're on about 1,440 subscribers at the moment, so we're going to try to get to 1,500 by the end of this month, which I'm sure is possible enough. So if you made it this far, again, thanks very much. I'd be very interested in the comment section below if you hold either of these positions and how many shares you have and your plans going forward for either of these holdings. Thanks very much again. Enjoy the rest of your Wednesday, and I will see you all in tomorrow's video.